Hello and welcome to Markets View at Deven Choksey, your daily market podcast where we decode the Indian financial markets. The GIFT Nifty is trading lower this morning, which is indicating a start in the red for the domestic markets. The Asian markets are off highs, where Hang Seng is down around 1% and Nikkei is shut for the trading session today. The US futures trade lower after cash market ended with minor gains on Friday. The US markets ended flat on Friday, where key indices did rise up to 0.2% each. US key indices ended first week of year in the red, where S&P 500 snaps 9-week winning streak. The US December unemployment rate is trading at 3.7% versus estimates of 3.9%. US December non-farm payrolls at 2.16 lakh versus estimates of 1.50 lakh. The US 10-year bond yield is rising above 4% following higher than estimates December non-farm payrolls data. The Brent crude is steady at $78 a barrel on sharp price cuts by Saudi and a rise in OPEC output. The gold prices did fall, and as we see after Treasury yields did rise above 4%. So these are the global market updates. As we see this morning that the Asian markets are off highs, GIFT Nifty is lower, and US markets ended flat on the Friday session. Let's take a look at the trade setup for today. We start a new week today, and on the Monday session, if we have a look at the domestic market, taking a cue from what happened in the last trading session, the market is expected to be volatile and likely to consolidate with a hurdle on the higher side at 21,800 to 21,850 levels and a strong support at 21,500 mark. If the index manages to decisively surpass the hurdle, then 22,000 can't be ruled out in coming days. But the breaking of support can push the index down up to 21,400 to 21,300 levels. So keep an eye on 21,500 and then 21,400 and 21,300 levels. Talking about the Sensex in the last trading session, it climbed around 179 points to close at 72,026, while the Nifty did show up around 52 points to close at 21,711. This indicated indecisiveness among bulls and bears about the future market trend. For the short-term uptrend status of Nifty, as we see, it remains intact, but the market is likely to find resistance around 21,800 to 21,850 levels in the coming sessions. A decisive move only about 21,850 to 21,900 levels would open the next upside target for 22,200 levels. Any dips from here would find support around 21,500. The falling volatility also supported the market as the fear index India VIX was down around 5.25% to 12.63 levels, while the broader market closed positive. The Nifty mid-cap and small-cap indices rising around 0.2% and 0.65% respectively. Let's now take a look at the key support and resistance levels for both Nifty and Bank Nifty. Talking about Nifty, Nifty is likely to see immediate resistance at 21,722, followed by 21,771 and 21,817 levels, while on the lower side it can take support at 21,651, followed by 21,622 and 21,576 levels. Talking about Bank Nifty, on 5th of January, that is the Friday session, Bank Nifty had a volatile day and closed with 37 points losses at 48,159. The banking index has formed small-bodied bearish candlestick pattern with a long lower shadow on the daily charts and held its previous day's low. Bank Nifty witnessed a volatile day of the trade during the Friday session. In the process, it has held on to the support of 47,800, where support in the form of the 20-day moving average is placed. Once this range bounce action is complete, we can expect the next leg of up move to resume. On the upside, there are chances that 49,500 from a short-term perspective will be kept on. Talking about Bank Nifty's resistance levels, it is expected to see resistance at 48,210 a level, followed by 48,467 and 48,680, while on the lower side it may take support at 47,908, followed by 47,766 and 47,562. So these are all the important support and resistance levels for both Nifty and Bank Nifty. Let us now quickly take a look at the stock-specific moves. We start with Titan Company as a jewelry, watch to eye care product maker has registered revenue growth of 22% on a year-on-year basis for quarter ended December FY24. Its jewelry business grew 23%, watches and wearable division showed a 21% growth, but the eye care business declined by 3% on a year-on-year basis. The next stock in focus is Godrej Consumer Products Limited, as the FMCG company has said the operating environment in India for Q3 FY24 continued to remain similar in Q2. Despite this, the organic business delivered steady underlying volume growth of mid-single digits. Growth was broad-based across both home care and personal care. Keep an eye on the FMCG company Marico, as the company said the consolidated revenue declined in low single digit in Q3 FY24 on the year-on-year basis. International business delivered mid-single-digit constant currency growth amidst transient macro headwinds in the Bangladesh market, while domestic volumes grew in low single digit on a year-on-year basis with a slight sequential improvement in core portfolio. The next stock in news would be Jupiter Wagons, as the company has received a contract worth Rs 100 crore from one of the leading automobile manufacturers for the manufacturing and supply of 4 rakes of double-decker automobile courier wagons. Tata Steel will be in focus, as the Tata Group company firm announced its provisional production and delivery volume for the quarter ended December FY24. India's production volume grew by 6.4% on a year-on-year basis to 5.32 million tons, and delivery volume increased 3% to 4.88 million tons, while Tata Steel Netherlands production volume fell sharply by 23% on a year-on-year basis to 1.17 million tons, and the delivery volume dropped 7.86% to 1.29 million tons. The next two stocks in list are the bank and financial plays, as Bank of Baroda would be in focus. The public sector lender global business grew around 10.6% on a year-on-year basis to 29.95 lakh crore, with advances rising to 13.59% on a year-on-year basis to 10.49 lakh crore, and deposits increasing 8% on a year-on-year basis to 12.45 lakh crore for the quarter ended December FY24. Domestic deposits grew by 6.34% on a year-on-year basis to 10.67 lakh crore, while advances rose by 13% to 8.62 lakh crore in Q3 FY24. Last but not the least, Union Bank of India would be in focus, as the PSU Bank said its total business crossed rupees 20.68 lakh crore as of the December FY24 quarter, growing 10.6% over the year-ago period. Total advances of the bank increased by 11% on a year-on-year basis to 8.96 lakh crore, and deposits jumped to 10% to 11.72 lakh crore as of Q3 FY24. So these are all the important stocks and news which will be in focus for the trading session today. Let's quickly take a look at the FIs and DIs data. The foreign institutional investors bought shares worth Rs 1,697 crore, while domestic institutional investors sold shares worth Rs 3,498 crore on 5th of January. And with this, we come to the wrap of our podcast session for today. Nevertheless, as we constantly say, we are in a new week, a fresh new session. The Monday session has started, but keep an eye on the volatility which has been seen. Of course, market might witness a lot of opportunities, but at the same time, there is volatility as well as cautiousness is of utmost importance. Irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.